Hello and welcome back to Explain the Charts. Today we are tackling the NZDUSD pair and providing you with an in-depth analysis based on both current market news and price action. Recent news and Google searches reveal considerable uncertainty surrounding NZDUSD. The US dollar has shown strength following inflation data releases and potential Federal Reserve decisions, while the New Zealand dollar has faced pressure due to an interest rate cut by the RBNZ. Market sentiment is mixed, with predictions varying on the pair's direction. Let's start by looking at the daily chart for NZDUSD. We observe a recent period of consolidation following a notable decline. The price action shows signs of potential support around the 0.58 to 0.59 range. However, a break below this level could trigger further downside movement. The overall trend appears bearish in the short term, as indicated by the recent price action and negative change percentages. Switching to the 1-hour chart, we can analyze the shorter-term price movements. Here, we see more volatility and frequent price swings, reflecting the inherent risk in short-term forex trading. We can identify potential support and resistance levels within smaller ranges, possibly providing short-term trading opportunities. Now, let's zoom in on a specific range of candles on the 15-minute chart, for example, the past 24 hours. This detailed view reveals the short-term fluctuations in the price action, giving us further insight into the current market sentiment and the reaction to news events. If we correlate the charts and news, the RBNZ rate cut seems to have influenced the recent bearish trend on all timeframes. The lack of definitive bullish signals across all charts indicates a period of cautious optimism. Traders should closely monitor the support and resistance levels discussed, as well as the overall news flow. A significant shift in either the US or New Zealand economies could dramatically change the NZDUSD outlook. Key price levels to watch include the potential support levels around 0.58 to 0.59 on the daily chart. A break below this range would strongly reinforce a bearish outlook. On the other hand, a sustained break above 0.60 would shift the sentiment towards the bullish side. Remember to consider the volume changes. The relative volume levels provide additional signals of confirmation when support and resistance levels are tested. In the short term, the NZDUSD pair is expected to experience further volatility, driven by continued reaction to global economic news. In the long term, the outlook remains uncertain, contingent on the resolution of the global economic uncertainty and political factors, potentially creating further trading opportunities for those willing to accept increased risk. In summary, the NZDUSD pair currently shows a bearish trend, but also displays potential support near the 0.58 to 0.59 range. A break below this would confirm a bearish trend. A sustained move above 0.60, on the other hand, would signal a bullish reversal. Keep a close watch on economic news and chart patterns for potential shifts in the market.